if inflation is a fear, what happens is the bond yields increase and the bond prices go down because they're inversely related, and interest rates increase. But if recession is a fear, then bond yields go down, bond prices go up, and interest rates also go up. So we're going to have to wait and watch what actually happens, because we are right now in that flux. There was fear earlier, now there's markets starting to stop panicking that much.
But looks like, isn't it the Fed is saying they're not going to cut the interest rate? They held it stationary last week, and they might do it in like later part of this year, I think.
That's right. And that's a very good point, because after a couple slides, I'm going to talk exactly about that. But before I speak about that, I want to talk to you guys about GDP and what we are seeing happening in the GDP, which is the gross domestic product. There is an agency in the US called Atlanta Fed. So the federal agencies in the US, there are several of them. One of them is Atlanta Fed. And what Atlanta Fed does, different from others, and it's very cool, is that it monitors the real-time performance of the GDP. Whereas rest of the places, they will find out, I think, a little while after that, how did the GDP do? So like maybe, how was the last quarter? Atlanta Fed monitors it in real time. So I have figures as of yesterday, and I'm going to show you what they're showing. So here is, here's the source. So Atlanta Fed, you guys can go and just check it out. So here's a chart that shows the evolution of the GDP in the quarter one of 2022. So you'll notice that the GDP consensus was that it was just north of 2% all the way until sometime in late February. And look, after that, there was a huge dump, and then prices started to, or the GDP started to stabilize. So why did this dump happen? Which means, and here's a chart that also signifies or displays the same thing. So on 26th of February, the GDP was expected to be at 2.3% annualized. Okay. So based on the figures that were coming in, there are a whole bunch of figures. They look at the consumer price index, they look at equipment manufacturing, residential yields, import, export, etc., etc. Look at all kinds of things to see, or all kinds of variables just to assess what's happening in the GDP. Is it growing, and if so, what rate at an annualized basis? So as of 26th of February, everything was hunky-dory. On 28th of February, the GDP started to turn negative, minus 1.5. So it went from 2.3 to minus 1.5. That's a huge jump. And then a few days after that, it went to minus 2.8. Why? And suddenly, even if you look at right now, the GDP is currently showing up until 18th of March, which was just a couple days ago, right? So up until 18th of March, it was showing that the GDP is at minus 1.8. So the question is, what happened? I'm going to bring your attention to a point which I also raised earlier on my slide. If you notice export, the line of exports, notice everything positive, suddenly minus 2.7. And when did that happen? Just on the 3rd of March. So why, and this is net exports. And net exports is import minus export.
Be sure to listen to Mr. Smiles next week with more golden nuggets and top-notch coaching tips. You can reach him by going to VinneyChopra.com. Be sure to like, comment, and share to show everyone how Mr. Smiles has brought your apartment syndication business to the next level.